Why shouldn't people be saving money in a bank account?
You gotta be crazy. I mean, look, they printed more money in the last, 5 years than ever in history. America is now the biggest debtor nation in history. Our debt to GDP a few years ago was 90%. Today it's about 125%. So the more they print money, the deeper in debt we get. So they increase the debt, right? And now we can't pay it off. And then they're going to raise interest rates into a recession. You got to be kidding me. This guy Biden is going to crush this whole country. I mean, Europe's in more serious trouble than we are. So the debt's going up. We can't pay it off anymore. They're going to raise interest rates and tax rates are dropping. Because the economy slowed so much, our taxes are going down. So that means the debt's going to accelerate. This is called a debt spiral or a death spiral. I think we're maybe 2 weeks to 2 years out from a crash.
Have you ever wondered if keeping your money in a traditional savings account is actually the safest place for it? What if we told you there are better options? Hello and welcome to Wealth. In today's video, we'll be exploring 5 alternative assets that are safer and offer more growth potential than plain old cash in the bank. Financial educator Robert Kiyosaki recommends these assets as superior places to put your money compared to low-interest bank accounts. By the end of this video, you'll have a better understanding of how to make your money work harder for you beyond just saving in a traditional bank account. Our goal at Wealth is to provide the knowledge you need to grow your wealth and gain financial independence. So let's get started. Precious metals. God's money.
Gold and silver is God's money. It's money made by God. And then in 1971, the U.S. government under President Nixon took God's money and turned it into man-made money. Never in the history of the world has this ever happened. In 1971, the U.S. and Nixon convinced the entire world to replace gold and silver with paper money. This stuff. Cash is trash. So the reason we have so much volatility in the world today is historically, since the time of the Romans and the Greeks and the French and the English and the Germans, every time they have taken God's money, like silver here, and replaced it with man-made money, there's been economic volatility.
First up, precious metals, which Kiyosaki refers to as God's money. This includes gold, silver, platinum, and the like. These metals have been used as currency and stores of value for centuries, and offer stability that fiat currencies can't match. When governments print more paper money, they risk devaluing the currency. Just look at hyperinflationary examples like Zimbabwe and Venezuela. But precious metals have inherent value that persists no matter what governments do. An ounce of gold today buys you way more than it did decades ago. People instinctively trust gold and silver because they provide financial security and independence from centralized systems. If the economy takes a turn for the worse, precious metals can protect you. Precious metals like gold and silver are fantastic alternatives to dollars in the bank for a few key reasons. For one, they're an inflation-resistant asset. Their value tends to rise along with inflation over the long run. This preserves your purchasing power no matter what happens to paper currency. Additionally, precious metals provide financial security and freedom. They're decentralized assets no government can control. This makes them appealing during periods of geopolitical turmoil or social unrest. And unlike bank accounts, they don't carry counterparty risk. You own the physical asset directly. With cash, you have to trust the bank's solvency. So if you want an inflation-resistant asset that provides safety and independence, precious metals like gold and silver are fantastic alternatives to dollars in the bank. They can preserve your purchasing power no matter what happens to paper currency. Now let's move on to our next asset class that Kiyosaki recommends: commodities.
Commodities are, number one is gold, silver, oil, land, water, food. So this is what I work for. When I left school, rather than working for a paycheck and working for money, my education had to go beyond getting a job, which I had a good job. But I now had to start, when I left school, about your age, the thing I focused on first actually was commodities. So back in 1972, I started buying gold. And it was illegal for Americans to own gold. Can you imagine that? Back in 72.
Next up, we have commodities. This includes materials like cobalt, nickel, and copper, as well as agricultural products like coffee, corn, wheat, and more. These raw materials have practical uses that drive steady demand. For example, cobalt is essential for batteries in electric vehicles and consumer electronics. As EVs gain popularity, cobalt prices rise. Nickel and copper have similarly useful properties that make them indispensable across various industries. No matter what happens in the broader economy, commodities like these will be needed. Here are some of the main reasons commodities can be smart investments. For one, they provide a hedge against inflation. Prices may fluctuate, but overall commodities appreciate, along with rising inflation over the long term. This maintains their value better than cash. Commodities also give exposure to rapidly growing sectors. As the world shifts to renewable energy and electric vehicles, the underlying commodities used in production can benefit. They also have inelastic demand curves. Usage and pricing is less tied to economic cycles, so the commodities offer stability amid recessions. Additionally, population growth drives long-term commodity demand. As more countries industrialize and populations rise, commodity needs will increase. And commodities offer diversification from stocks and bonds. Their prices don't move in lockstep, allowing them to smooth out portfolio volatility. Now, commodities come with their own risks like supply and demand shifts and price swings. They aren't a complete replacement for cash, but can complement it as part of a balanced portfolio. If you want an asset tied to tangible economic activity with inflation hedging abilities, commodities are a smart choice. Their built-in utility and demand offers stability and growth potential over just holding dollars. Moving on to our next asset class, real estate.
I started when I was 25, bought my first house, and it was an apartment, it was an investment property. I didn't live in it, I rented it out, and it put money in my pocket.
Real estate is up next. Property has always been a foundational component of strong investment portfolios. And in today's environment, real estate stands out as an excellent store of value compared to keeping your money in the bank. Let's discuss the advantages real estate offers as an asset class. For one, real estate often appreciates along with inflation, so it preserves your purchasing power. Property values tend to rise during periods of economic growth and dollar devaluation. Real estate also generates rental income. The regular cash flows act like a bond's coupon payments. This recurring income complements the inflation protection. Additionally, rental demand is stable and resilient even during recessions when tenant volumes increase. The steady tenants and lease payments offset economic volatility. Real estate also benefits from leverage. You can finance a purchase with a mortgage and enhance returns on your invested capital. And property owners gain tax advantages like depreciation deductions that boost after-tax income. You also don't have to directly own property. REITs provide easy access to rental income and price appreciation as publicly traded securities. Overall, real estate should be a key piece of your portfolio given its inflation resistance, recurring cash flow, resilience, leverage, and tax perks. Don't just rely on a savings account for growth and income. Tap into real estate instead. Now let's examine stocks as another alternative. Stocks. Value investing. Value investing in the stock market is another alternative Kiyosaki recommends over keeping cash in the bank. This involves buying shares of strong businesses that are underpriced compared to their intrinsic worth. Great value stocks that stand the test of time, yet still trade at reasonable valuations, include stalwarts like Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, Coca-Cola, and Walmart. Here are some of the main advantages value stocks offer. For one, well-run companies increase their earnings over time, which lets them pay growing dividends. Your passive income can rise steadily along with an expanding business. Cash in the bank fails to deliver this growth. Value stocks also provide diversification across various sectors. Even if one company faces trouble, your risk is diversified away by holdings in retail, healthcare, consumer staples, and other industries. Value stocks take a patient, long-term approach that rewards investors through gradually increasing dividends and compounding returns over decades. And even stalwarts can get periodically undervalued, allowing you to buy them at a discount compared to their intrinsic worth. This gives a margin of safety. So while cash has a place for short-term needs, value stocks better position you for rising income, diversification, expertise, and long-term compounding without sacrificing safety. Lastly, let's examine business ownership.
So when I was your age, I knew that the assets I wanted to acquire, the richest people own businesses. I stopped working years ago because I have businesses. So number one is a business. So when I was in my 20s, I knew I was going to do what it would take to school, study, learn about taxes, debt, insurance, accounting, lawsuits, and all this through business.
The final asset Kiyosaki recommends over cash is starting your own business. Building a successful enterprise requires work up front, but offers immense rewards down the road. Here are some of the key benefits of owning your own business. For one, it allows unlimited income potential. Unlike a salary job where you hit a ceiling, there's no limit to how far you can grow a thriving business. Owning a business also unlocks tax advantages like deductions and credits unavailable to regular employees. The tax savings allow you to reinvest more capital for growth. Additionally, you can construct real assets like technologies, intellectual property, and brands that appreciate over time. This acts as a hedge against inflation, eroding the value of cash. Starting a business also provides the ability to leverage other people's time by hiring employees and outsourcing work. This scales your efforts. Perhaps most importantly, business ownership grants you financial freedom and control over your life. You're no longer dependent on an employer's rules or vulnerable to layoffs. Now, clearly, launching a business involves upfront risks and costs, but the rewards of unlimited earning potential and independence from traditional employment can be well worth it. Rather than settling for paltry bank account interest, take control of your financial life by starting your own company. The payoff can be life-changing. And there you have it, the 5 assets Robert Kiyosaki recommends as smarter places to put your money than a traditional savings account. If you enjoyed this video and want to see more content to help you grow your wealth, don't forget to like, subscribe, and hit the notification bell. Getting your feedback helps us create more useful money tips and financial education just for you. Let us know in the comments which of these 5 assets you find most interesting. Is your money better off in the bank? Or should you look at alternative investment options? We'd love to hear your thoughts. Thanks so much for watching, and we'll see you in the next video.